So the topic is fundamentals of research. This is chapter 4 of NISM, and I think a beautiful designed course by the authors. I would say whoever has designed this. So this talks about what are the objectives. Let's first identify the objectives. So the learning objectives, also known as LOS. ठीक है ना? One is what are the various approaches to investing? So what is investing versus what are the various approaches to investing? That's one. Second is overview of technical analysis. ठीक है, and technical analysis में आपको separate class लूँगा, detailed class लूँगा. उसमें the only restriction is we cannot discuss prices of the last 1 month. Skip that. Then we can discuss in detail. और मुझे लगता है कि मेरे इससे बेहतर टेक्निकल एनालिसिस इंडिया में कोई नहीं पहुंचा. दैट इज वन, एंड आई हैव रीजन टू से दैट बिकॉज आई मिक्स स्टैटिस्टिकल एनालिसिस. तो वो आपको बहुत मजा आएगा, एंड दैट इज फॉर योर ओन ग्रोथ. इट इज नॉट टू एडवाइज एनीवन, इट इज नॉट टू टेल एनीवन व्हाट यू हैव बॉट, व्हाट यू नॉट सोल्ड. दैट इज एन दैट्स योर पर्सनल जर्नी. सो डोंट टॉक अबाउट स्टॉक्स, व्हाट यू हैव बॉट, व्हाट यू हैव सोल्ड, और दूसरों को भी मत खरीदो. समझ गए कि नहीं? सो टेक्निकल एनालिसिस जो है उसका डिस्कस करेंगे. आई विल गिव यू ऐसे पर्सपेक्टिव दूंगा जो आपको बहुत ही 360 डिग्री है, एंड आई डोंट थिंक एनीवन इज टॉकिंग अबाउट इन इंडिया. आई थिंक टेक्निकल एनालिसिस as a knowledge has not matured. People are simply copy pasting the indicators. So one is understanding this. Then we'll also get an overview of fundamental analysis. That's the objective. Also understand what is QA, which is quantitative analysis, and also understand what is behavioral. So lot of it is behavioral. है ना? Why it deviates from principles is why technical analysis does not work in many conditions, and why fundamental people do not have rational behavior is because of the word called behavioral finance. है ना? अभी आपने एक वर्ड पढ़ा होगा EMH. The first few chapters in corporate finance is EMH. EMH पढ़ा है क्या? एफिशिएंट या एफिशिएंसी, मार्केट हाइपोथेसिस, है ना? 3 टाइप के होते हैं. और EMH जो था इमेज थ्योरी है, बट इट डज नॉट वर्क बिकॉज ऑफ द बिहेवियरल फाइनेंस. यस, इट डज नॉट वर्क बिकॉज ऑफ. ठीक है, तो इन्वेस्टमेंट्स क्या है? व्हाट इज इन्वेस्टमेंट बताएगा. व्हाट इज इन्वेस्टमेंट एंड हाउ इज इन्वेस्टमेंट डिफरेंट देन ट्रेडिंग? बताइए, बहुत सिंपल है, बच्चों वाला सवाल है. इन्वेस्टमेंट इज लार्जली कंसिडर्ड टू बी लॉन्ग टर्म, है ना, ओवर अ पीरियड ऑफ टाइम. सो हियर यू आर, द पीरियड इज स्लाइटली स्ट्रेच्ड, है ना. द इन्वेस्टमेंट्स, व्हेन यू टॉक अबाउट इन्वेस्टमेंट्स, यू टॉक अबाउट अ टाइम सीरीज ऑफ डेटा, एंड व्हेन यू टॉक अबाउट ट्रेडिंग, द टाइम सीरीज इज ओनली इंट्राडे बेस्ड, है ना. सो दैट इज हाउ इट इज डिफरेंट. The tools required are very different here. The tools required are very different here. Most of the tools, most of the indicators that work here do not work in this time. Only few indicators. You can count on your fingers, you know, that these are the indicators which work in both the time frames. Mostly it does not. Mostly. You have to think from a different perspective when it comes to investment. When we talk about technical analysis in detail, I think one full week we will run technical. And advanced technical. We will talk about, say, एक छोटा example देना, Fibonacci जैसे we'll talk about Fibonacci. But Fibonacci में people have not researched that consolidation, है ना? That consolidation is something that works very well. Fibonacci works very well in areas of consolidation. No one has researched about it. ठीक है? वो मैं आपको prove करके दिखाऊंगा. Bollinger Bands, what are the statistical findings on Bollinger Bands? What are the statistical findings on regression analysis? At that point in time, you would be required to conduct technical analysis, statistical analysis with the help of your data scientists, data science students. Right? So, आपके जो colleagues हैं, so probably once we have finished this, when we move to technical analysis, you would need to interact with them. So ensure that those 2 guys are happy. Take care, very good care of them. है ना? लंच अच्छे से कराइए और अच्छे से प्लानिंग कीजिए कि 5:30 बजे के बाद क्या करना. ठीक है? जिम के चक्कर में तलवार का डूब गया. ठीक है, चलिए. So what is active investing? Born out of the investment principle is something known as active. Investing is an activity. There is something known as active investment or active investing, and something known as passive investment. So what is active investment and what is passive investment? Very simple, eh? Yes, wrong answers are most welcome. What is active investing and what is passive investing? Right. So essentially, when you invest in an index fund, okay, and you are not doing anything actively, you're only rebalancing when the index fund, you are not rebalancing, it is a fund manager who's rebalancing because the index is being managed. And yesterday I had showed you index site, Nifty indices, and the methodology, because there was one sentence written over there that this index is rebalanced every 6 months. So the reason for us to go there to visit that particular site was so that you understand that in index fund you are not doing the balancing, point number one. It is the fund manager who has to balance the index fund because the index itself is undergoing a rebalancing. There is a possibility of rebalancing. Whether rebalancing will happen or not, that is not known. There is a possibility of rebalancing which is happening every 6 months. And because the fund manager is the manager of a fund which mirrors one or the other index, some index, it is mirroring some index. So if the index goes for rebalancing, if you are mirroring, you are following some index, you also have to rebalance. So in that case, passive investing does not mean that there is no rebalancing happening. It does not mean that. In passive investment, rebalancing is happening, but you are not doing it. It is the fund manager to do it. Why the fund manager has to do? Because you have gone and seen on one of the exchanges website which maintains so many indices, sectoral, large cap, mid cap, small cap. Those PDFs, it talks about the rebalancing, all of it, and that was the reason why we went there and check that site. So there is rebalancing happening, but you are not doing. In this, you are actively rebalancing. Maybe whatever is the time frame, whatever is the time period, depending on you are doing the active rebalancing. That means you are buying and selling securities on your own. You are deciding, finding reasons for rebalance. So this is active versus passive investing. समझ गए ना? And obviously, if you are doing passive investing, you are earning equivalent to the index that you are mirroring, correct? Or the fund manager is earning what the index, the return that index is earning. Can there be difference in the index that you are following and the fund that the index is mirroring? Can there be a difference? And that is known as what? The question is not whether, वो आपको सबको पता होना चाहिए, that is basic question. The question is, the real question is, once you have said yes or no, that is known as what? Brokerage. So that is known as what? There is a particular term. Noise, okay. और बताइए? Not necessary. अभी error बोला, अभी alpha बोल रहा है. Error is not alpha. Please remember. है ना? That is known as पढ़ा होगा आपने. I'm sure you have read it. So that is known as striking. ठीक है? So that is all about passive investments. So even passive investment, you can miss the performance of the actual index by few basis points on which. How large could the large difference होगा तो fund manager ही fire हो जाएगा, then it is not. But there are tracking errors even in a passive. That means if Nifty 50, some fund is following Nifty 50 over a large period of time, I mean if you do find a long period average or a moving average, the return is close to 12%. It is possible that fund which mirrors Nifty 50 is giving 11.5. It is possible it is giving 11.75. If the difference is significant, then the fund manager is definitely losing. Now I'm coming to it. So there is a possibility that gives you this kind of return. There is a possibility it will give you this kind of return, but you know it is not sustainable because all asset classes are mean reverting. It will come to its long period average, which is this. So it's a momentary blip in the performance on the upside or downside. If you see this on a continuous basis, he's losing his job. And if you see this performance for a long period of time, then the fund manager will be rated as a star fund manager. Ideally, it will not happen in an index fund. It has to mirror more or less. But there are fund managers known as star fund managers. The entire mutual fund industry is chasing them. They keep switching, unfortunately. They get tons of money. It is their right. As an employee, no one can stop them. You can't have bonded labor. But there are star fund managers. So when we learn how to read mutual fund performance via various statistical, this is something that also matters. So when you go to value research online, do read about the performance of the fund manager, his history, which fund, how many years, what sort of returns has he. Okay? So this is all about passive investment. Active investment strategies would require more effort. You have to be on your foot all the time. So you have to be, and you have to do a greater number of transactions in active investment. So greater number of transactions are required to be done in active investment. समझे आप? In active investment, greater number of active investing, greater number of transactions are required to be done. समझ गए ना? Have you understood? ठीक है? Now, the role of research in investment. So, what is the role of research analyst? So, what is the role of a research in any investment activity? There are two roles that are largely played. One is obviously the research part of it, and the second is the analysis part. So you are doing research as well as you are doing analysis. ठीक है ना? Is that clear? ठीक है? So you are doing research, you are doing analysis. Okay. What is the difference between insider information versus Mosaic theory? This is also a part of your CFA syllabus. Insider theory, say insider trading versus Mosaic theory. That is how you differentiate that whether you are using or misusing information. What is insider trading or insider information? See, insider information is you have access to information which is not available to the public, and that is a crime because there is, I think, PUTFP, some word is there. The SEBI clause hai, unpublished, unfair trade practices, something like so. Information which has not been published, is a sensitive information, and it comes under, yes, the right word is UPSI, unpublished sensitive information. And there is prevention of unfair trade practices. This is a SEBI's regulation. It is targeting at this, and it is looking at everyone is under scanner today, research analyst, employees, senior employees who have access to information which has not been made public yet. So what is Mosaic theory? Then every information is insider information or insider trading. So what is Mosaic theory? So Mosaic theory is where you collect bits and pieces of information from public domain. For example, I'll give you some funny examples also. Say you speak to the watchman of a company, at the gate, and you figure out how many trucks are going out, in and out. So you understand the supply chain of the company, whether it is able to supply products or not. Point number one. This is the same theory which was applied by Dow Jones, Charles Dow, 150 years ago. Or 125 years ago. How is that? Because he said, don't only follow Dow Jones industrial average, but also look at Dow Jones transportation average. So if you want to understand the supply chain, whether trucks are coming in, coming out or not, whether it is how many trucks frequently, earlier how many trucks used to go out of the material gate, how many trucks used to come. So you have some understanding whether there is enough demand or not. right? Say you talk to the salesman of a company at an exhibition, and you are trying to understand how the industry is performing, how the sector is performing. That is not insider information. That is Mosaic theory. You've collected information from bits and pieces as part of your research job. You've spoken to some analysts, you've spoken. So something which is available in the public domain, but not with everyone. And when you speak to them, you collect it. So you can speak to the customer, you can speak to the creditor, you can speak to the employees. As long as it is not unpublished sensitive information, then it is Mosaic theory. It is available in the public domain. Experts would know, consultants would know, chartered accountants would know, but it is not something which is unpublished. If it is unpublished sensitive information, materiality clause is there, then they'll be classified as insider information, and it is insider trading, which is not good. And have you understood? For example, CEO talking about an unpublished acquisition proposal would constitute an insider information. Now, an unpublished acquisition is not something a watchman would know, a customer would know, an employee would know, and the general employees would know, of a mid-rank and a lower rank would know. Only the senior management would know what the top management, or only the top management would understand a few people as to what acquisition strategy they want. So this is not Mosaic, part of the Mosaic theory. Also, insider information is a material non-public information, and only when it is published. So, if you collect from different sources, and when you put together the public and non-public information, then this is known as Mosaic theory. So, often analysts, listen to this what the textbook says, very important, because this is also law. This is not just a book, this is also a regulation. So this book covers your regulation. This is very important, and this applies to all. Often analysts collate information from different sources, which individually may not be significant. Individually it is not significant, so it is not classified as a significant information. Okay, but when put together with public as well as non-public information, then this becomes an important critical insight. Let me prove how. So, CEO of a company, so you have some public information which everyone has. Now you saw that the CEO of a certain company, you noticed him at some popular restaurant in a tier 3 city. Now, this is not a public information. Not everyone would know. You saw him there. So, maybe you have some idea, some inclination, or some understanding that possibly the company wants to do something, or is looking for something, or has visited some supplier. Why is the CEO of such a company available in a tier 3 and maybe having good food and a good thali there? But what is it doing? This is non-critical information. He's traveling, right? And you're not tracking him on a daily basis. If you're tracking him on a daily basis, it's crime. Only his security team is supposed to do. Just to add to, I have a senior student, and it's a very large bank from a different country. He's part of the security arrangement. So what he does, his only activity, he's the head of security, but he's not like a head of securities and facilities. Watchman manage can also come, and he's my senior student, very good salary package. And he manages the movement of his CEOs, CFOs, and CXOs in kinds of emergency. How would a CEO exit? How would a senior management? What if someone kidnaps the CEO? So what's protocol, what security arrangement? Because he's a CEO of a large company, of an American bank, but in India. So they have their own standards. So this guy is just tracking and managing his security protocol of the senior guy. So otherwise you're not supposed to track. That guy can track him, but other guys, why did the vehicle stop at a certain point? Did it stop for a long period of time? Because there have been instances where CEOs have been kidnapped. One particular instance, and I would not name it, it is very shameful, often listed, it's like a Fortune 500 company, an American company, his CEO was kidnapped, if I'm not mistaken. So otherwise you are not supposed to track. That's the point. Let's not go off track. But if you see a CEO somewhere at some client location, at some competitions location, right? or if you notice him at some vendor's location, there is something happening. This is not available in the public domain, right? This is not available in the public domain, but this is something which is very, very important. You know? This is something important. Which is inside it? No, this is not. मैं वो बता रहा हूँ, इस पर मैंने आंसर लिखा है, जैसे CFA में ये पेपर मैंने लाइव सॉल्व इट, है ना? So this is not a, और वो आपको रेस्टोरेंट में बैठ के खा रहा है. एक मैं आपको बताता हूँ, जैसे I just lost that example. What was that example? I just lost. I want to tell you that. Just skipped my mind. So this is because अगर आप CFA का ethics वाली जब हम book पढ़ेंगे, this example is very clearly mentioned that if the person is dining somewhere and you saw him and he's dining with a restaurant with a competition, it is not a normal dinner, and that information is not supposed to go out. What do you notice in a public place? It's a critical information, but it is not that sensitive which would move the prices. So the criticality angle comes from prices. If I disclose this, that he was having dinner somewhere, if I write about it, or if I base my assessment about this, and if it can cause a severe impact on the prices, then certainly it is a sensitive information. Then I am not supposed to disclose. But if I just see him somewhere at some exhibition, some competition, and it is not supposed to shake the prices, then it is not critical. Then this is not sensitive information. And this example that I have put up is from the CFA level 1 ethics example, which does not qualify as a critical information and insider in nature. So insider, you have to be very, very careful. And these are known as Mosaic. Okay. So now let's look at what is technical analysis. ये बहुत जरूरी है आपके लिए. Mosaic theory is important, and you will have to run the test of Mosaic theory, because you will, while you are writing reports, you will have to be careful whether it is insider information. Can I publish this? Can I put this in the public domain, or this is not an insider? So that kind of analysis you'll have to do. Otherwise, you'll be causing major embarrassment to yourself, and also inviting regulatory problems if you publish anything like that. Not many times you'll see. So there have been cases where couple of employees of two different IT companies have been fired. And they were possibly friend circle or colleagues, maybe the earlier colleagues. So one is working in a major IT company in India. This is the case 2-3 years ago. The other guy is working in another company. You know, so there are two companies, and this is related to an IT company. This is company A, this is company B, and the employees of these companies are connected. Either they are known, they knew, they were colleagues earlier, and this guy is talking to this about this company that we have lost the project to you, and they're discussing, and they know that this client has been lost, the name of the client they know, and this guy confirms that we have won the project, and these guys go and buy options on company B which has won. And this they are doing as without knowledge. They are not trained, they are just IT guys, technical guys, and both the guys are fined, and I think they are also penalized by the company. So this is an insider information which the employees. So if you have a senior family member, and especially in a decision-making role, you should not speak about that company at all. There are companies where our family members, senior family members used to work. We put them in blank, like a blanket kind of cover, blanket ban. We never speak about those companies, though some of them people have retired. So this is just out of your own understanding. No one will come and tell you that whether you should talk about this company or not. But some companies where your parents are working, and those are listed companies, you should never ever speak about it. Even in your examples in your MBA books and MBA examples, you should not talk about it, or MBA case studies. Then you have technical analysis. Now, technical analysis is all about price. So this is all about price. and this is all about volume. So it is a study of price. It is all historical prices, correct? And it is a study of the volume, and it is also, it says it is also a study of the time. So usually this all put together is known as, especially the price and volume put together is known as price action. And what are you trying to do using a price action? You are trying to see whether the stock you can buy, whether you have to hold, or whether you can sell. These are the decisions that you are trying to make: buy, sell, or hold using technical analysis. So it covers the price movement, historical price evaluation, the volume related to it, and also it's a time series data. That's why it is on a time line. Okay? What is fundamental analysis? Fundamental analysis is study of, what is it study of? It is study of the three statements. First thing is the 3S, or the three statements you study to understand whether you can buy this company, whether you can sell this company, whether you can hold this company. Most of the equity research and majority of the equity research report is a combination of fundamental analysis and technical analysis. The moment you talk about price, stock price, it becomes a technical. The moment you talk about historical prices, price performance, moving averages, it is known as, it is a technical analysis. So it is a combination of both, and you are trying to find the fair value. Intrinsic value we had studied. So fair value is nothing but your intrinsic value, which is nothing but your cash flows discounted. So it is DCF. Understood, no? It is a present value essentially. And now they talk about EMH. Okay, I had told just based on my memory, it says that the thought process is in contradiction of the EMH, which propagates that share prices incorporate and reflect all relevant information. So what is EMH all about? And if we will talk about EMH in detail, EMH says that everything is already included. Everything is included in the price. So there is no need to do fundamental analysis, but there are three forms of fundamental analysis. The last one, the weakest form, says that all the public information is there, private information is not incorporated or absorbed in the prices. So the prices that you are seeing on the screen, the stock prices, they do not include the information, the insider information of the private information. But in a true sense, stock prices reflect a combination of both, which is the public information as well as the private information to a certain extent. It has idea, it is looking forward, so it is always gauging as to what is happening. So fundamental EMH, they are always looking at, they are always, the EMH theory, this one holds true, that a stock price, there are two things to the stock price, please understand this one. Stock prices look in advance, they are looking forward in nature. That is why you see that the stock prices, before a bad news comes, the stock corrects. If a stock corrects bad news, you're wondering how did the stock correct? It is always looking forward. There are analysts who are always continuously looking at the factors which impact. Then there are stock prices which move up before the news comes out of the market. That is the only way, plausible way to explain this is the stocks or the EMH that you are looking at. The EMH that you are looking at is a combination of the what you call is the public information as well as the private. Okay, na? This is Chali. So now, what all things you will look into when it comes to fundamental analysis? The overall cycle, the overall cycle of the economy, the economic cycle, the macro trends, competition, the intensity of the competition. इसको लिख लीजिए, ये सब आपके एग्जाम में आ सकता है. Competition है, competitive intensity actually. This is very important because an industry which is going through a price war, a discount war, never survives. Everyone is a loser. And there is a very famous case of PepsiCo and Coca-Cola, which they teach in IIMs, is that they realize that despite the intense rivalry and competition and so much of ad spends, one year PepsiCo is a winner, second year Coca-Cola is a winner. The next year PepsiCo, so it keeps switching. So in wherever there is a discount war or there is a price war happening, no one is a winner. So competitive intensity is very, very important, and this was spoken by Michael Porter in his book called Porter's 5 Courses. So this is from that. It's from your strategy class. So here you are studying strategy. Here you are studying economics. Okay. Here you are studying what? This is from your accounting class, cost accounting class. Okay. अब देखिए और क्या है. So fundamental analysis uses it's a multidisciplinary in nature. It uses a lot of things. You are also studying the cost structure of the company. This cost structure is what? This is from your cost accounting lecture. So you have to know what is direct cost, indirect cost, what is fixed cost, variable cost, what is operating leverage, not operating margin, something known as operating leverage. Have you heard about operating leverage or fixed a contribution cost or contribution margin? Do you know about it? It is essentially the relationship between sales and fixed cost, because fixed cost is something that can kill the company. So you should know about operating leverage, very, very important. Okay? Cost structure you should study, very, very important. Okay. Then you should also study about the financial position of the company. Okay. You should also study the capabilities of management. You should also study the capabilities of management. You should also study the governance structure. इसको ध्यान से देख लीजिए. You should also study the governance structure. Okay. And all in all, what you are doing is you are doing economic analysis. Okay. You are doing industry analysis. Okay. And also company analysis. So you are doing company analysis. अच्छा मैं वॉइस ठीक है, वो वॉइस इज इक्वलिंग तो ऊपर बात ऊपर से बोल रहे हैं. ठीक है, कोई बात नहीं. वो देखेंगे, मे बी बिकॉज वी आर स्पीकिंग इन स्मॉल स्पेस, तो होपफुली विद टाइम दी एकोबल. थैंक यू फॉर द फीडबैक. जो भी अटेंड कर रहे हैं क्लासेस, थैंक यू वेरी मच. सो अच्छा, गुड है ना. फिर दूसरा देखिए, क्वांटिटेटिव रिसर्च क्या है, लास्ट 2 पार्ट्स. तो व्हाट इज क्वांटिटेटिव रिसर्च? इसको बोल दिया ज्वाइनिंग इन 2 मिनट्स. जस्ट राहुल इज ज्वाइनिंग इन 2 मिनट्स. सो व्हाट इज क्वांटिटेटिव रिसर्च? 2 मिनट्स में ना. सो व्हाट इज क्वांटिटेटिव रिसर्च? सो क्वांटिटेटिव रिसर्च इज फंडामेंटल हमें है. हाँ, फंडामेंटल. ठीक है. इट इन्वॉल्व्स qualitative research and the second part is quantitative research. ठीक है ना. So quantitative research would involve what? And quantitative approach is also used in technical analysis. So when you are studying numbers, you are doing quantitative research. You are doing quantitative research. ठीक है. So when you are studying the financial metrics, when you are studying the operational metrics, anything related to number is nothing but your quantitative research. Okay. And also this would mean that you are using statistical research and all. So that also reading charts and all is also again quantitative in nature. It's a mix of both. Just one second, last sentence. And the behavioral approach to equity investing is, what is the behavioral approach to equity investing? You have to know how people behave. This is known as behavioral finance. So it is based on the expected information, so expected performance and the risk associated gets impacted by how people behave. So these are impacted by behavioral biases. These are cultural biases, behavioral biases, rational biases, whatever, or irrational biases. The performance of an asset class, how people would invest, how they would not invest, when they would exit, or how, what kind of risk. Sometimes you see the market is going up and people are taking risky bets. Silver is moving up and people still want to buy. People is at the top still. So these are behavioral biases, and there are philosophies behind it which drive the world of finance. Just put it down. So this is how. This is the thinking behind the behavioral biases, and this defines also why people get greedy. That is what behavioral finance is all about, and why people deviate from fair pricing. Why people don't want to buy at fair prices. Why people want sometimes buy a stock which is tanking from 300 rupees it comes to 303 rupees. People still want to buy. The stock has gone to 3,000 rupees and people still want to buy, right? So people still buy. So these are behavioral biases and one should be careful. So we will stop here. This is behavioral approach to equity investing. Very, very important for one to understand. So this is chapter 4. Then we come back after the break and we finish chapter 5. Okay? So that's